Good morning, all of you. When the investor would like to make the conduct of any of the investment activities, he has to make conduct of fundamental analysis and technical analysis. Already we have discussed about the in detail about the fundamental analysis, and there is a some part of technical analysis. So under the technical analysis, mainly there is a price and volume are going to be considered more to make conduct of the investment activities. So meanwhile here the investors are going to be making conduct of the technical analysis through the consideration of some of the use of chart. The charts are those which are going to be making us to know that how there is a price trend will be there in the market, in the each and every securities, how there is a price changes will be going on. It is a one of the tool under the technical analysis which can be representing with the graphical manner. So the graphic presentation of the data is going to be making the investor to take his decision in regarded with the investment activities. When you have been come across the changes in the prices can be denoted under only under the data, so might be you cannot understand easily, but the same datas are going to be shown under the chart, so it is not difficulty to make the understanding how there is a price movement will be there under the securities for a week, for a day, or for a month. So like that there is a charts are going to be using with the different things or the different tools under its preparation. So we can see there is a spot and there is a current trend buying and selling activities can be shown under the charts, and also which are going to be under the chart we can make indication of the probable future action. So the charts are showing what will be the probable future can be there for your securities. So whether you can make your investment activities or not, this can be also shown under the chart. So and it is also going to be showing that past historic movement, how the movement of prices of the securities will be there in the previous period, in the past period, that can be also we can see under the charts. And also it is indicating that area of support and resistance where you can make your investment activities, which is the supporting the place or the supporting prices to make conduct of your investment activities, and in which you cannot make the investment activities with a written full manner. So the where to resist, where to support your investment activities can be easily identified under the conduct under the preparation of all these charts. So these charts are going to be prepared in the very much differentiated manner. So those are the different type of the chart we can discuss in the today's class. So among the chart there are so many different things will be there. So the first one we shall see the line chart. So the line chart will be the simple one which is going to be showing us as the graphical way. So the line charts are the most basic form of chart. So basic means the fundamentally primarily the many of the investors are going to be come across with these line chart, and it is also making the investor to understand in a very much easy manner. So the day to day the price increase or the decreases or the trend means the direction of the movement of prices of shares and securities are represented with the sum of the spot. Then all the spots are going to be made it join, and through that you can come to know whether there is a securities are going to be having their prices changes in the increased manner or it is under the decreased manner. So those are going to be composing with the some of the lines. So that line will be showing under the graphical way, which is known as a line chart. There is a single point which are going to be there under your price level changes of the day to day manner will be make it join, and that will be make it shown under the graphical picture. This will be known in the name of line chart. The line charts are the most basic one, and they are composed with a single line, only single lines with adding with making composing of all the dots will be done, so that this is known as a line chart. So from left to right the line is going to be made it considered. So the opening to the closing, how the prices changes will be there. So only the closing price of the day can be identified, and those all the closing prices are going to be made it prepare or made it composed with the one single line. So that will be called as a line chart. Through this you will come to know that. So if we are considering, So this will be the what will be the OX axis, horizontal axis will be there. So this will be showing as there is the time period. So if you are showing, this will be the line chart of 1 day. So hourly there is a changes which will be going on under your shares and securities. All the closing prices are going to be denoted. So all those closing prices, when it is going to be made it composite with the one single line, so that will be showing how there is a increase and the decrease movement of the share prices will be there. So that is known as a line chart. This is the one type of graphical picture tool using under the technical analysis for the investment activities. Then the next chart will be that bar chart. The next chart will be bar chart will be there. So the bar chart will be the one where there is a formally by the preparation of graphical picture will be formed in the shape of bar. So in the shape of form means joining the highest price and the lowest price of a particular day by a vertical line will be forming one of the shape like as a bar. So that will be known in the name of bar chart. What will be the investment activities will be going on in the share market. So those all the things are going to be made it considered under the bar chart with using of their opening and the closing prices will be there. The bar chart is the simplest and the most commonly used tool of technical analysis will be there. So this will be built to make it consideration of the dot which is entering into the representing of highest prices at which stock is going to be traded. On the day how there is a stock is going to be having its trading activities, what is the opening price of the shares will be there and what will be the closing price of the share will be there. Among those, which is the highest price of the shares and which is the lowest price of the shares can be identified under the bar chart. So there is a dot which is going to be showing as indicating as lower price. So this will be the lower price will be shown under the bar chart. So when there is the share prices are to be at a lower price means, so this will be so pointed at a dot as a lower price. So when there is, it is indicating, so from that lower price there is a opening price of that day will be going connected with that and there is a closing prices are going to be denoted. So at the end of the day, at what level there is a high level prices changes can be identified under the dot of high. So through this there is a line is drawn to connect the both the points as a horizontal. So that will be showing as like as a one of the nub, like as a one. So bar like it is showing like as in the shape of bar. So that line chart is going to be indicating as a only the price movement. So the bar chart is going to be making the simplification how there is a the things are going to be as with the higher and lower prices of securities with the opening and opening and closing. So that will be considered as the second chart, which is the bar chart. The highest price and the lowest price are going to be considered with the closing prices of each and every day, which is going to be plotted with the day-to-day manner. So that will be the another tool or another graphical technology which is going to be representing the investment activities under which there is a price movement determination. So this will be the second type of chart will be there. Then the next chart will be that Japanese candlestick. The third chart will be Japanese candlestick will be there. So under the Japanese candlestick, why it is called as a Japanese candlestick? Because it seems like as a candle. So it seems like as in the graphical way, it is in the way of the candle will be there, so that it is called as the name of the Japanese candlestick. So under the Japanese candlestick, here they are going to be considering. So under this chart, the highest prices are going to be denoted. The lowest price of the day will be denoted. The opening price and the closing prices of shares can be denoted in the shape of bars. So it is like as a mixture of bar and line. Bar chart will be considered. The more most of the graphical picture will be showing like in the name in the shape of bar, but So they are going to be also making consideration whether it is moving in the upward or it is moving in the downward. Those are the things are also they are going to be mentioning, so that this is seems like as a candle known as the Japanese candlestick chart will be there. So under the Japanese candlestick chart, so there is a some of the colors they are going to be putting. So through that you can come across whether there is a trend of the chart will be, or the trend of the shares will be, whether it is going on increases or it is going on decreases. So that we can be find out under the Japanese candlestick chart. So this is only the shape of charts, or the design of the charts are going to be having the differences, and there is a no any differences will be there in the representing of the trend movements will be there. So if it is increasing, it is going on in the upward movement. If it is decreasing, it is going on in the movement of the downward. So in the same sense, they are going to be making shown of the representation in the graphical picture. So under the Japanese candlestick, so it will be having the some of the three types. So the three types of the candlestick which we can be find out as like a white will be there, the black will be there, and there is the doji will be there. So these are the some of the different colors they are going to be representing. If your trend movement means the prices of your the shares and securities will be going on increases, so then that will be shown in one color. So might be in this picture we can see that. So there is a highest prices increases can be identified under the blue color, and if there is a prices changes will be going on in the decreases, so that will be showing in the orange color. So with the different color wise they are going to be showing the candles which are going to be making shown as a the trend movement of your shares and securities. So that will be called as in the name of the candlestick chart. So this will be the other type of chart will be there. Then the next chart will be trend and reversal. So in consideration of the trends, so the trend is nothing but we can already come across with that it is a movement of the share prices in the market, how there is a movement of share prices will be there, so that we can see under the trend, that will be known in the name of the trend. So might be your trends are going to be, price movements are going to be either it is uptrend or downtrend, or it is under the flat trend. We can see uptrend means there is a lower and the highers will be there, again there is a high low, then there is a high will be there. So in the sense which is the previous low will be there, more than that there is a lower will be has been decreased, it means it will be having the higher low. So and there is a in the downtrend also we can consider when there is a prices of shares and securities will be at a higher manner, it is going on at a very much lower. So then you are going to be again having the increases, means that will be considered as a lower high. So like that there is a lower low will be there, then there is a lower high will be there under the downtrend. Flat trend means there is a price changes will be going on in the very much stabilized manner. So that will be the flat trend we can be considered. So here the many of the cases your trends are not going to be considerably, as always it is high, always it is going on in a very much lower level. We cannot say all the time your prices will be in the uptrend, all the time it will be there under the downtrend. Sometimes there is a trend will be having the reversal. Reversal means it is nothing but the change in the direction of price movement is referring as a trend reversal. Your prices of the shares and securities will be going on, sometime it is increases, then again there is in the direction will be took place as in the manner of the reverse, means it is going on in a downward manner. So that will be considered in the name of trend reversal. So here the share prices, if they are there under the uptrend, so later on it will be moving as in the way of the downtrend. So that will be representing in the name of there is the trend reversal will be there. So that we can be seen under the picture, how there is a trend will be going on in the uptrend movement and there is a downtrend movement will be there. If your share prices are going to be having the raising means, so it will be the uptrend. So suddenly if there is a share prices will be going on decreases means the trend will be showing as a downtrend. So in this way there is a trend will be having their changes in the day to day manner. So that will be known in the name of trend reversal. May you can see the shares and securities prices are going to be showing in this way. There is a the uptrend will be there. There is a hour to hour there is a share prices will be going on their changes in their price. So the movement will be going on as in the up high and there is a low will be there. So suddenly there is a direction will be at a very much lower level mean it will be considered as in the name of trend reversal. So when there is a trend reversal will be there, some of the points will be identified as it is a the support and the resistance will be there. So here it will be considered in the name of the support and reversal. So here there is a support and reversal means support means occurs when the price is falling but reverse direction every time it reaches at a particular level, to which we are calling as a support means. So it is a point to where you can be having the reaching at a higher level. So it is the point where you can be having the point from where you can be having the downtrend. So that reached level will be called in the name of the support point. So under the support you can be identified with that the next in the future period your prices will be going on in the downtrend or it will be going on in the lower level or the in the movement of the downtrend. So that we can be find out under the way of the support. Then there is a support. Under the support the usually it occurs whenever the turnover of a large number of shares trend will be concerned. So the several price levels, when there is a turnover of the many of the shares and securities are going to be considered at a larger number. So that point will be showing as at a support level. When stock touches with a certain level, so there is a one peak point will be touched by the price movement means, so that is called as the support. So means from there you can be having the next level it will be going on resistance or it will be going on with the changes of the downtrend. So that is called the stock touches with a certain level, then it is going to be under the dropping. So that dropping movement will be considered in the name of resistance. So resistance means when the share prices moves upward but may fall every time it relates with the reaches with the particular level. So that will be considered in the name of the support level. So that will be called in the name of the resistance level. So here the stock will be reaches to the downtrend to certain level and from there it is going to be making its any of the increases means that is a support level. From the level of peak if it is going to be come across with the dropping point means the dropping movement means it will be considered in the name of the resistance level, resistance point will be there. So when we are going to be considering, for example, your share prices are going to be around at a 150 rupees for a sum of the week. So when it is rises, so the support and resistance can be explained with one of the example. So if your share prices are to be at a 150 rupees for a some week, then it rises to the reaching of 210 rupees. So at this point the price halts with the falls back. So in the sense when it reaches with the 210 rupees it will be halting for some period to that extent of the high level prices. So the script when it is going to be keeping falling from the peak level to the dropping to the original point which is considered as a 150. So when it reaches to the 210, so that will be considered as the level of peak which is under the support. So then when it is started again with the falling down to reaching its original prices which is the 150, so that will be considered in the name of the resistance. So from the 150 to 210 rupees when it is going to be having its movement. So we can see that green line. So this is the 150 rupees of share if we are considering as a original price. So then when it is going on increases, this trend of upward will be considered in the name of support level. So it reaches with the 210 rupees in the week. So then again there is a price will be going on in the falling down. So that will be the level which we are going to be considered in the name of the resistance. So at this point the scrip is going to be at a very much cheaper, and the investors are going to be making the buying activities, and the demand will be making the price upward. When there is a 150 rupees will be there, so there is a demand will be going on increases, because of the price level will be going on in the upward movement. The demand will be also going on at a higher level. So this will be shown in the name of support. When it reaches to the 210 rupees, after that it is going to be under the downtrend. So that will be becomes the resistance level. So the price are going to be at a higher manner. Later on it is going to be having at a lower level prices going on, means it will be showing as you need to make sell off your the shares and securities in the market. So then only you can be having your the returns at a profitable manner. So that will be the showing of the support and the resistance, which are going to be shown as only with the tops and bottoms. They are going to be representing with the graphical manner, which is going to be showing us the price level changes under the shares and securities. The next one will be that which is as under the reversal pattern. So the reversal pattern means the price movement displays uptrend and downtrends. The reversal patterns are chart formation that trend to signal a change in the direction of the earlier trend. So here the reversal patterns are going to be showing that. So what will be the price level changes will be going on. So those price level changes are going to be represented in a very much systematic manner. So here there are head and shoulder formation will be there, and there is a reverse head and shoulder formation will be there. So here these are going to be representing the reversal trend pattern. So where there is the formation of the bottom will be going on in a very interesting manner, where there is a middle portion is also going to be shown, how there is the things are going to be having their changes with the lower level and the higher level. So here the patterns are going to be showing as like a with a different type. So those will be seen under the manner of reversal. So reversal in the sense how there is a uptrend and the downtrend changes will be going on. Those will be showing under the certain type of the shapes. So that will be having its formation. So will be known as in the name of the reversal pattern. So those reversal patterns are to be as in the one will be the header and shoulder formation will be there, and there is a reverse head and shoulder formation will be there. So here the reverse head and shoulder means it is an inverted head and shoulder. It is also known as inverted head and shoulder will be there. So the header and shoulder formation, the most popular reversal pattern is going to be identified in the name of header and shoulder formation, which usually occurs at the end of the long uptrend. When you are going to be having the price level changes at a very much longer period, from the one lower level to the another lower level, if there is a price movement will be having the time period will be at a very much longer period. So that will be making forming of the sum of the shapes, which will be having the sum will be at a very much head manner at a peak level, and the sum will be at a very much lower level, which is shown as the formation of the sum of the shoulders will be there, and there is a one head will be there. So that will be represented under this chart known as a header and shoulder. So head and shoulder, this formation resembles the head and the shoulder of a man, hence then it is called as the header and shoulder. Why it is called as a header and shoulder? The shape of your chart will be showing as there are two shoulder like a man. So how there is a shoulders will be there for the human being. So in the same way there is a shoulders are going to be represented in the formation, and also there is a peak level or the higher level price changes will be denoted as in the peak level, which is showing or resembles as in the manner of head. So that will be shown in the name of the head and shoulder formation. The chart formation will be representing seems like as a head and the shoulders will be there. So that will be known in the name of header and shoulder formation. Then the next formation will be considered in the name of inverse head and there is a shoulder formation will be there. So the inverse head and the shoulder formation means here there is a reverse of the previous pattern will be considered. So here totally how there is a head and shoulder we have seen as in the positive manner which is in the uptrend. So here it will be the reverse. The reverse means there is a opposite head and shoulders we can be find out under the graphical formation which is known in the name of the inverse head and shoulder formation will be there. This pattern is the reverse of the head and shoulder formation which is really inverted. Inverted means it is a opposite. The directions are going to be totally opposite. When there is a last seen formation, head and shoulder will be upward. So now it is going to be showing as in the downward. So which is going to be also in the form of the head and shoulder. So that it is known as the inverse head and shoulder formation will be there. So here there is a end phases are going to be consisted as with the three distinct bottom and the tops will be considered. So these all the things are going to be making the forming of the sum of the shoulders. So that will be considered under this formation as a head and shoulder. So this is the point of the lower, very much lower price trend will be there, and there is a one formation of left shoulder and the right shoulder formation we can be seen, and this will be called as a neckline. The what will be the trend price movements are going to be drawn with the one line. So that is known in the name of neckline. So this will be considered as a inverse head and shoulder formation will be there. So this is the other type of the chart we can be considered. So there is a some other continuation of some of the different types of the chart will be there. So those patterns are going to be which tend to be providing with the some of the breathing space to the earlier shape rise and fall will be considered after that completion of these patterns. So when we have been considered, the changes of the price level will be considered in the very much differentiated manner. So sometime it will be shown as in a very much differentiated the shapes in the graphical picture. Those will be represented with the some type of the pattern. So among those we can be considered the how there is a breadth of the market will be there, which is going to be having its the level of the sales and the buying will be there. Those price movements are going to be made it determined under the some of the different type of the pattern. Among those pattern we can see there is a triangles will be there, and also there is a some of the flags will be there. So here there is the triangles are going to be shown. So there is a triangle formation is going to be made it consideration as with the identification with the popular technical analysis chart we can be seen. Here there is a some triangles are to be like as a symmetrical manner will be there, ascending triangle will be there, or the descending triangles are also seen. So in the sense the what will be the shape of the triangle will be there, those will be represented with the some of the category like as a symmetrical. Symmetrical means here there is a this shape will be considered in the name of symmetrical. So when you are going to be seen this price level changes, this has been made it formation of the symmetrical, the triangle will be there. The price movements are going to be drawn with the line will be as with the uptrend. So this will be seems like as a symmetrical triangle. So here there is a fluctuations are going to be from the past to the future will be as in a very much lower level. So there is a previous to past, there is a previous to future, there is a very much lower level will be there. So that will be make it consideration. There is a bottoms are higher than the previous bottoms. Which is the bottom will be there, this will be. So previous will be at a lower manner and this will be at a higher manner. So through that what will be the chart formation is there, that triangle will be known in the name of symmetrical triangle. And there is a other triangles will be there, descending triangles will be there. So the descending triangles means this one. So where there is a the descending triangles means the connecting the lower tops forms the upper trend line. What will be the lower tops will be there, which is the lower top will be there. This is the lower top, and that will be considered with the making formation of the trend line with the upper top. So through that the what trend line will be there, that will be make it representation as under the descending triangle. So the pattern which is going to be indicating that the bear market operators are going to be having the powerful than the bull operator. When there is a descending triangle will be there, this is representing as, so there is a, the market will be very much supporting for the bear market, not the bull market. So and even then there is a other type of the triangles will be there, like as a ascending. So here the ascending trends are going to be, or ascending triangles are going to be showing as a upper trend. You can see there is a upper trend will be there in this triangle. So there is a, the trend line is connecting the top and the lower trend line, which is going to be in the form of the raising. So this will be showing as a raising trend line will be there. So when it is going to be forming with the sum of the triangles, that will be known in the name of the upper or the ascending trend line. So ascending triangle. So here there is a market will be very much favorable for the bullish market, not for the bearish market, because the price changes will be probably having the upward movement. So it will be showing as there is a, the bull market is going to be more supported under this showing of the price level changes. So these are the some of the different type of the triangles which we can be considered. Under the technical analysis, we shall also see in the one of the other theory which is going to be making us to known with use of these type of the chart. So with the formation of chart only, they are going to be representing, or they have been made it profounded of the some of the other theory to make the conduct of technical analysis. So this theory will be as a Elliott's wave theory. Already one theory we have been discussed, which is the Dow theory. The second theory will be, mainly there is a, these are the two theories can only will be there. So remaining many of the theories will be there, but even though more important considered technical analysis theories are the Dow theory and also the Elliott wave theory. So according to the Elliott wave theory is an investment tool which is going to be used analyzing the financial market cycles and the estimate future market trends, taking into account the investor behavior as well as the price high and the low. There is a Elliott wave theory is going to be representing how there is a price level changes will be there. Along with that, the higher and the lower prices, there is a what will be the behavior of the investor will be there. Whether there is a investor is going to be purchasing more at a higher prices or at a lower prices. So with his behavior, how there is a price level changes will be there, those will be influencing for the investor to make conduct of his investment activities. So that we can be that has been profounded under the Elliott's wave theory. The Elliott wave theory was developed by an experienced accountant named Ralph Nelson Elliott in the 1930s. So that this theory is known in the name of Elliott wave theory. What will be the theory profounds? So here there is a some of the motive phases of the cycle will be there. So those will be called as a impulse, and there is a labeled as a 1, 2, 3, 4, 5. So here some of the phases means it will be the movement. How there is a movement will be there. Those phases will be, we can see as under the points of 1, 2, 3, 4. So and there is a some of the phases will be there where there is a considered things are going to be as like a the sum of the corrective phases will be there. So those will be considered in the name of the corrective phase. So here there is a motive phases are to be considered in the name of impulse and labeled as a 1, 2, 3, 4, 5 means which are going to be having the higher prices and also smaller lower prices will be there in the changes of say shares and securities. But the corrective phases are those where we can be come across with the direction will be at a downtrend, and where there is a labeling of the ABC will be there under the corrective phases. So that we can be seen under the price level changes. And under the Elliott wave theory, so the patterns of Elliott wave theory has been representing in this way. If there is a market is under the bullish market will be there. So meanwhile it will be representing as the line of trend will be in this way. There is a 1, 2, 3, 4, 5 will be representing there is a high level prices increases or there is a lower level prices decreases can be representing in this 1, 2, 3, 4, 5 numbers, and if there is a going on decreases will be there, that will be showing in the alphabetic manner. So this will be the bullish market. So but if there is a trend lines will be going on in the bearish market, from the higher to the lower level there is a price decreases will be showing under the trend movement. So that will be shown under the 1 2 3 4 5, which is the representation of, there is a motives will be there and there is a correctives will be there under the ABC. So these are the lines will be showing in a downtrend manner. So this will be the bearish market trend lines we can see under the Elliott wave theory, and this will be the bullish market trend line under the Elliott wave theory. So this is about all about the how there is a the charts and the bars and also the some of the graphical presentation will be seen under the technical analysis. Thank you.